Hi everyone, it's Tony Crisellio here, one of the senior mortgage advisors and team leaders at Capricorn Financial. I just wanted to give you all a quick update on a few positive things that have been happening in the mortgage market over the last few weeks. So first of all, the majority of main high street lenders across the market have reduced their rates of interest in recent weeks, which is great to see, and long may it continue over the next few weeks and months. Now, lenders still recognise that the cost of borrowing is a lot higher than it was this time last year. So in addition to reducing rates, a lot of the main high street banks have also made some significant criteria changes just to help ensure that monthly repayments are as affordable as they can be, and also to potentially give borrowers access to a higher level of borrowing, increasing their purchasing power. Now, to give you a few examples, we've had Halifax recently permit lending up to the age of 75. So that potentially enables some borrowers, depending on age, to increase that maximum mortgage term by an additional 5 years if we use an employed income. That potentially has a noticeable impact on monthly repayments by stretching the mortgage term for an additional 5 years, and it potentially also gives borrowers access to a higher level of borrowing as well. They've also recently made some positive changes towards their interest-only criteria, giving borrowers additional flexibility in terms of how they restructure their repayments, again, which also helps monthly repayments and potentially gives borrowers access to a higher level of borrowing. In addition to that, we've also got HSBC. They've also increased their maximum mortgage term from 35 years to 40 years. Again, that additional 5 years will definitely have an impact, a positive impact on committed mortgage expenditure, and also potentially increased level of borrowing. And HSBC have also made some positive changes to their interest-only criteria as well. We've also had Accord recently enter the market for joint borrower sole proprietor mortgages. That is a kind of mortgage where if you want to use an immediate family member's income to increase the level of borrowing available to you, you can choose to have an immediate family member on the mortgage with you, but most importantly, they're not on the title deeds, or you can choose for them not to be on the title deeds to the property. So what that means is if you've got a borrower and a parent on the mortgage, if that borrower is a first-time buyer, you can protect their first-time buyer status if that family member already owns a property. So it's a great avenue in the instance that you can't quite get the level of borrowing that you need and you want to add a family member onto the mortgage as well. In addition to that, on the buy-to-let mortgage side of things, we've also had Birmingham Midshires and Virgin Money make really positive criteria changes to help buy-to-let landlords, especially when they're looking to carry out a like-for-like mortgage on a mortgage they already have. So overall, lots of positive criteria changes happening. The likelihood is, even if you looked at options a few weeks ago, there are better options available at lower rates of interest and also potentially access to higher level of borrowing. So things are looking a lot more positive in the last few weeks, which is great to see. And if you've got any further questions, or you want to find out a little bit more information, please don't hesitate to get in touch with us. Thank you.